Travis Robson. He's from IG South Africa. Thanks very much for joining us, sir, as always.
Thanks for having me.
Global markets are in sell-off mode currently. What's driving them and what's changed?
Yeah, I think we're a bit of a sell-off following US President Donald Trump. A lot of uncertainties with his policies. I'm not sure if you're aware, but there was a judge that has put a halt on his travel ban. So a lot of his policies have caused a lot of uncertainty, not only just in the US, but globally. Also, what we're seeing is negativity in oil price. There's been push-pull factors there. You've got supply constraints on the one side, but you've also got oil price coming out of, the oil consuming nations coming out of the northern hemisphere coming out of the winter, which obviously have effect on the price. What's also subduing it as well is also the talk about US shale production's increasing. So there's a lot of push-pull factors, and in the markets yesterday we saw a massive move down on the energy-based stocks, both in Asia this morning as well as in the US yesterday. Our markets, I think we're very much following the US, on news in the US. We're also very much following the strong dollar, and that hurts our industrial-based stocks. We are seeing a big push in the resourcing stocks, and that's led by the gold stocks on the back of safe haven demand on the back of political uncertainty.
Now, still keeping with the gold stocks, obviously they're doing well on the back of the better gold price and so on. But I suppose if you're a long-term investor, you need to guard yourself in terms of following fashion, because in the US there is an expectation that we're going to see interest rates hiking there, and that means people won't necessarily want to be in gold.
Yeah, I think the demand for gold will still exist in the medium term. The reason being is you've got political uncertainty in Trump's reign. I think that will continue for 4 years. You might find that will calm down as investors and traders start to understand his nuances and his plan of action. You're also getting uncertainty in the Eurozone, Brexit. That's going to be a very uncertain time for investors to analyze what's going to happen over the next 2 years. We've also got election uncertainty in France as well. That's also putting pressure from an investor side and looking at gold as a safe haven demand. So to answer your question, I do believe that in the short term, traders and investors will understand what's happening with the gold, with the US president's policies, and that might curb the spending or buying of gold. But I think also the Eurozone and Brexit is a big factor in guys buying gold.
Now, when it comes to mining policy here at home in South Africa, we've heard at the mining in Daba, the Mineral Resources Minister saying that he's going to ensure that the mining charter is issued next month and that there should be finality on the minerals bill that's been sort of in limbo by June time. Given the fact that commodities do seem to be going through an upswing now, do you think that this clarity that we hope we should get will bode well for South Africa as an investment destination for people who are interested in the sector?
It's going to offer two things. As we know, this deal has been pending for 2.5, 3 years. What it will give clarity to investors is that mines have the opportunity to go to court, and the shortfalls in court proceedings and getting licensing, for examples for water licensing and whatnot, will be a lot smoother. Which will definitely improve the mining relationship. It will also possibly stimulate further growth, which is necessary for South Africa and for Africa. Well, what my concern is that this bill will give the mineral development within government more power, and that could open it up to corruption or favoritism between certain companies, which if that happens, then we will see a negativity in the price action along the commodity stocks, as foreign investors will be a bit cautious. But so there's a good story there and there's a bad story there. Time will tell how it plays out.
Okay. And then I wanted to focus on Anglo American. We know that they have this 3-year strategy where they're going to be offloading a load of assets, because obviously they had a lot of debt at one point and commodities were not doing so well. But now commodities are generally doing well. Does it make sense for them to throw out the baby with the bathwater and sell assets that are accruing them good revenues and profits right now?
Yeah, definitely agree with you. Last year, commodity price was a slump. Anglos was needed heavily in debt. Investors were very cautious and they wanted to offload some of their non-performing or non-core assets. As we've seen improvement in the commodity prices, we've definitely seen Anglo's change its stance. In November, in a big conference when they were doing a roadshow to platinum mines in South Africa and the diamond mines in Botswana, there was talk of them not selling some of their core assets that were making cash, and this has continued into this year. So we've definitely seen a change from the management of Anglo's to hold on to those assets that are still producing good revenue for the group. However, they are going to look at dissolving some of the bigger non-core assets, and they have changed the strategy from where they were 2 years ago. So there will be a disposal, but I don't think it'll be as fast-tracked as previously stated.
You have 30 seconds. There's the SONA address to be given by President Jacob Zuma on Thursday. Does it affect markets at all?
Yes, it will. If he starts to play with Treasury and starts to talk about changes within the Treasury, you're going to see a move in the Rand. You're also going to see a move in the financial stocks. So I'd be cautious on the financial stocks. I'd be watching the Rand closely to see if Zuma does any changes within the Treasury.
What a succinct answer. Thank you very much.
Sure.
Well, that was Travis Robson. He's from IG South Africa.